Lots of asset classes. Why should you be putting your money in startups where the risks are much higher?
Yes. Oh, you're right. There are a lot of asset classes, and as we were discussing earlier, you don't choose one over the other. You should have a diversified portfolio. Right? The problem today is
why include startups?
Well, okay. So if you think about it, right, companies create value throughout the stage of their life cycle. Right? The problem today is because technology is getting adopted at a much quicker pace. Right? So a lot of the value is now being created when companies remain private, as opposed to when they had time to grow up as a public company. So if you do not have startups in your portfolio, you miss losing out on the biggest part of the growth phase. Think about Uber. It's a $60 billion company. It's not listed. Grab in Singapore. It's not listed.
But then the risks are much higher as well. These companies can blow up.
Absolutely.
So what do you take into account before putting your money or our money into a startup?
Okay, so that's a good point, right? So by definition, investing in private equity is a riskier asset class than public equities, right? There is a self-selection process in place in public equities. It's not yet in place in private equities, right? So the key to investing in private equity is to find a platform that curates your investments. And that is what we are. It's not about putting a deal on our platform, attracting money and leaving you alone. It's about curating the investments. We look at 200 companies, we invest in only 2. Right? We put our own money in alongside with you at the same terms. Now, it's about the alignment of interest, it's about the fiduciary duty. So it's about investing alongside people who've done it before.
Our crowd is based in Israel.
Yes,
it's now making inroads into Asia. Yeah. And you've recently been appointed to this position for this expansion in Asia. Where do you see opportunities and what are your priorities in this part of the world?
Okay. So if you look at Asia, Asia has got two different streams of Asia. Asia is not running on one track, right? So in some cities in Asia, there's a surplus of capital. For example, in Singapore, in China. In some countries, there is a surplus of ideas. In Indonesia, maybe in India, right? Some countries like Thailand, they're in the middle of it. In Taiwan, they're in the middle of it. So really, there are two things we can do. It's the whole venture capital model surrounds putting money to good use in good companies, right? So it's about marrying the excess capital with the excess entrepreneurial talent. So if you think about Israel and Singapore, we're very complementary in our stages of national development. Israel is a startup economy that needs to learn how to scale up. Singapore is a scale-up economy. Everything's big here. We need to learn how to start up. We need to create the entrepreneurial buzz, right? Like what DPN Taman talks about, like what Mr. Manon is speaking about. You need to create the ability to create the startup culture.
If you take a look at your current investments, 30% lie in China, India, and the US. Yes. Given the optimism in this part of the world, where fintech is concerned, where startups are concerned, do you see that percentage, that ratio increasing?
Actually, currently it's less than 30%. It's probably less than 20%. And the reason for that is quite simple. If you look at the sources of entrepreneurial ideas today, it's really the Silicon Valley in the US and Israel out of Tel Aviv and Jerusalem. Right? So thus far, more than 80% of our investments are focused on the Israeli startup economy. Okay? So we have not deliberately chosen to ignore the rest of Asia. It's a matter of how we grow, and clearly I've just joined the platform. I've had 20 years in investment banking. It's about trying to extend the platform. So yes, we will increase our investments in the rest of Asia, in the US, in Europe, and also the source of funds.
I want to touch on ICOs. That's the big issue right now. I mean, governments are taking different positions. We have China, South Korea on the one hand banning ICOs. We have Russia considering. Singapore is still pending. What do you make of it? Is it a Ponzi scheme, as some call it?
Yeah, so Aslinda, there was a panel yesterday at 4 o'clock. I spoke on that panel. There was a divergence of views surrounding ICO. So my view is quite simple. I'm not against financial innovation. I think ICOs are a means to an end. It is a platform that is itself agnostic. It is how you use it. It's like fire. Fire can either warm your food or it can burn your house down, right? The problem today is that ICOs are out in the wild, they're unregulated, and by and large, I won't say all of them, but the vast majority of the companies that are raising money via ICOs do not have the necessary fiduciary duties in place, the alignment of interests, the regulatory frameworks, also protection of investor interests.
So how do you legitimize ICOs? What would it take, and when do you see that happening?
So I think ICOs as a platform, It is no different from a digital ledger. It is no different from the CDP system that we run, the scriptless CDP, to measure ownership and to assign certain utilities or ownership rights to the people who participate in it, right? And I like the MAS view. If it looks like a security, if it smells like a security, it is a security. So they actually issued a very interesting paper yesterday that I would highly recommend everybody read. It has 6 case studies in there, explaining to you each individual scenario in case anyone is confused. I think the MAS is taking the right approach to this. You need to always protect the vulnerable segments of society. And like it or not, every new innovation always has a nefarious side to it. And I think we will need to see some of that weeded out, some of that blown out before this whole platform really matures.
So the jury is still out then, you think?
Well, I wouldn't say the jury is out. You've heard a lot of people talk about it. I think most of us who are in the industry, who are in financing, you've heard the CTO of DBS talk about it, for example. Most of us who looked at these things have come to the same conclusion that it is dangerous as it stands today. Right? So we agree that there should not be over-regulation, but that there should be some form of regulation. There should be some form of consumer protection, some form of investor protection.